We're getting good at this, Sean.
Oh, that's the top right there. Strazzy just called the top.
He's sounding like a traitor, being all arrogant.
Steve, I'm excited about the episode this week. We just recently had a Chicago portfolio accelerator event, but back in May, we did one in Sonoma, which is near San Francisco, for those who don't know. And today's guest is a San Francisco resident. He came up to our event and was a great contributor to the event. And it was the first time I ever got a chance to meet Andrew Menaker. I don't know if you had met him before, but I've been aware of him for years, but that was the first time I ever got to meet him. And I was very excited about that.
Yeah, I know that you guys have become buddies and have stayed in touch since then. I think it's awesome that we have these trader psychologist people come out to our events, because I don't know if there's anybody that we all need to be talking to more. We've had one on the show maybe, but I'm excited for this conversation because it should be a little bit different, right?
How open are you to us peeling back the layers of Steve Strazza? Can we get in? Can we get underneath your skin there?
I don't know if anybody wants that, though. You can do whatever you want. That's what I love about this show. I don't know where it's going to go. So,
well, look, Andrew Menaker, as a trader psychologist, he works with a lot of hedge fund traders, big bank traders, as well as some larger retail traders. So he's seen some things. He's worked with some people through some issues, and so I'm excited to pick his brain about some common things that come up that traders deal with, and maybe some insights he's gained. Because when we met him in Sonoma, I only had like maybe an hour to talk to him there. I mean, I wish I had the whole weekend to talk to him because we got a million questions. So let's bring Andrew on. Andrew, welcome to the show. Welcome to the Off the Charts podcast. We're so glad you're here. We're so glad to finally get to know you. Thanks for being here, Andrew.
Thanks for the invite, guys.
We, like I said, we all met you for the first time, at least in person, last May. It's 2024 right now. So in May of 2024, we all met you, and it was it was kind of an informal thing. We didn't have you give any presentations or anything, but you did chime in on some conversations and offered your insight. And I don't know about you, Strazza, but I was like, we could use about 3 more hours of that content in that meeting that month.
I would love to know, Andrew, just being in that room, we're surrounded by our crazy team constantly. So I'm always talking to Sean, like, what did you think? Were you like, oh my God, what did you think about this group of, traders and analysts?
High energy. It was great. I could feel the energy of the room. It was wonderful.
We do have good energy. Yeah. All right.
JC can be accused of a lot of things, but being low energy is not one of those things.
Yeah. I've known JC a long time. Yeah.
So Andrew, maybe let's set the stage for people who are unfamiliar with you. Maybe go back to how you got involved in the field that you're involved in now. You work with traders, you work with investors. Yeah. How did that start for you? I know you didn't you didn't set out to do this early in your career. You're doing other things, but where did this road begin?
Yeah. Wow. My origin story question. So a couple of disclosures. One, I've never even had a single economics class, finance class, or even a business class when I was in college. Psychologist. So I'm coming out of grad school, tons of student loan debt, a lot of debt, nervous. What am I going to do for work? Got really lucky. A professor of mine who was supposed to take a contracting job for the Navy at the Alameda Naval Air Station couldn't take it. So she gave it to me. And it turned out to be something that was really big. I didn't realize how big it was going to be. I got involved in a situation at the airbase where it was a hostage negotiation situation. A civilian employee showed up at the base, armed, wanted to kill himself, alerted the media. The commanding officer of the base paged me. This is in 95. This is before people had cell phones, or many people had cell phones. I got the page, went over, and I pretty much had to talk this guy into putting his weapons down and have a peaceful resolution. During this whole process, I'm way over my head, not trained for this, trying my best to remain calm. And the commanding officer kept coming up to me and saying, how long is this going to take? How long is this going to take? And I said, I don't know, but I'm trying my best. And he said, look around, Andrew. There's a lot of weapons on this guy. And he's not going to, if he does anything, if he starts to squeeze that trigger, he's going to go down. I've got the risk contained. I'm just kind of worried about how long it's going to take and the uncertainty. And then he walked away. And I kind of thought to myself, wow, this guy's kind of talking about how risk and uncertainty are similar, but they're not the same. And I kind of made a note of that in my mind. The situation was resolved peacefully. Went in the newspaper, the media wrote about it. Wells Fargo heard about it. They had me come in, interviewed me, had me start working with their traders. And I realized that my experience of that threat assessment moment, I was able to bring with me into my work with traders and analysts at the bank. And it was a real fundamental defining experience for me. I also got bit by the market bug at that point. At this point, it was maybe 96, 97, living in SF.com explosion. Everyone's trading everything, internet's exploding. So of course, I got involved in trading at the same time. And so I had never planned on doing this kind of work, working with traders as a psychologist.
So Wells Fargo saw the article in the newspaper about you negotiating with the weapons bearing bad person.
Well, actually, I was supposed to go in for an interview before this happened, but then I couldn't go for the second interview because of this event, and I was stuck at the base. So I actually called and said, sorry, I can't come for my second interview. Can I reschedule? Thinking, oh, they're going to say no, because it was a highly sought after position. And they said, okay, yeah, let's reschedule. So, and then when I came in for the second interview, they were really impressed. The article came out in the newspaper and I was hired.
What was the position that you were interviewing for?
It was an internal EAP, and it's an employee assistance program, but it's internal to the company. So I handle bank robbery assessments, bank robbery debriefings, bomb threats, threats against executives. Pretty much, they'd come to me when there's something bad that would happen. They're trying to figure out, how real is this? How worried do we need to be?
Absolutely.
Yeah.
All large corporations have these guys.
Yeah, there's threat assessment specialists in all large corporations. Yeah.
Sean, I think back to, you got to be good to get lucky sometimes. I feel like it's such a great example. Like what a way to kick off your career with a bang. You were just out of school, right?
And just out of school. It was crazy. Exactly. And it was, a pretty decent paying role for me. And it was like a godsend, really. It was like, oh my gosh. And I had no idea that I was going to love it as much as I did.
So what was your thought at first when Wells Fargo said, we want you to talk with our traders? Like, you didn't really know much about trading at that point, right?
No, I started reading up on it. Started poking around on the internet. This is back in the late, mid 90s. So there wasn't much out there on it, but some. So I learned quickly, a lot of reading, talking to people, learned on the job. Yeah.
Andrew, but you've never been a trader. You've also never really been like a passionate person about markets or anything like that.
Prior to that, no. But now I'm been very involved for many, many years. But prior to that, no. I think I opened up my first account, maybe 96 or so, 95, 96.
Do you think that maybe gave you an edge early on because you were probably immune to a lot of biases that a lot of other trading coaches who I know?
Yeah, I think you may have something there, because I have seen with clients that I've worked with, there's a really big difference between people who grew up trading, maybe they grew up on the floor, transitioned to the screen, or their first job was at a bank, versus someone who came into trading later. There's a definite difference. Yeah.
Like what? Elaborate. What are some of the
well, I mean, there's a lot of differences. Like, for one, I worked with a lot of folks who, this is maybe a little different than what you were talking about, Steve, but people going from a bank to a hedge fund, from the sell side to the buy side, work with a lot of traders doing that. It's a really difficult transition to make psychologically for a lot of reasons. Compensation structures differently, eat what you kill on the buy side. It's a very, very, very different type of a role. Working with guys from the floor in Chicago, moving to the screen, super difficult. Their edge is gone. They can't see what brokers are filling what orders on the floor. That's their edge. It's gone. So what are they going to do? So it's really different. Yeah.
So I think this is interesting, because going back a little bit more to the beginning, you weren't trained in finance, right? You were not, you didn't go to school, you didn't get an MBA in finance or whatever, but you were trained in psychology. And so your first foray into this with Wells Fargo, dealing with traders, and you don't really speak the language yet. You learned it, as you said, but I don't think it was as hard as it sounds. You could correct me if I'm wrong, because the challenges that traders face in a lot of ways are the same challenges that anyone in any challenging profession faces, right? It's not so much the rules of the game that are so hard, although they can be hard, but it's more how you're dealing with the stuff in your head, right?
To a certain degree, although I would say even more what you said, Sean, I would add to that and say trading amplifies all the issues that we wrestle with in our lives. It's an amplifier.
So that explains why when we're losing, we tend to get really down on ourselves and really depressed and whatnot. And flip side, when we're winning, we think we're masters of the universe and everything's great. And let's go buy that expensive car that I was looking at because everything's going to be great forever.
Yeah. And FOMO, right? You feel like you're missing out on some concert that you might want to go to, that your friends are going to. You feel FOMO, but you look at the market and FOMO's even worse. So markets tend to amplify natural human emotions.
Do you think there are, let me rephrase this question. What are some of the differences in the struggles that traders who work and manage large amounts of money? I know you work with some very large traders. We won't name any names, but what are the differences that those people deal with versus, say, a guy like me who manages a smaller account? It's my own personal money. Like, are there things that you notice with those big traders that are just like, holy cow, this is crazy stuff?
Oh yeah, well, there's a long list. I mean, I'll save the pure psychological issues for a moment, but I'll say, first of all, they deal with client expectations, management expectations. They're on stage, essentially. They're being watched and evaluated. Everything is being watched and evaluated. So it's the idea of trading on stage. The other big difference is that this was a really eye-opening experience for me, you guys, when I first started doing this work in the 90s, late 90s. I used to think that really big traders had something really special about them and really unique. And I was not too wrong about it, but what it really is that they have the same emotions, the same discomforts, the same fears, the same frustrations as smaller retail traders do. The only difference really is the bigger traders have a way of not acting out on their discomfort as much as other people do. They have the same feelings, but they don't behaviorally act out on those feelings quite as much. They do sometimes, but not as much.
Does it take time for these people who have figured those feelings out and how to act on them? Does that take time? And is that something that is like developed and learned through experience, or are people born with something that there's just something in them that makes them better for these roles?
That's a really great question. And that's a question that's been addressed a lot. And there's been a lot of, like the turtle tribes many years ago, right? And trying to put together a group of guys that have never traded, and can you teach them from scratch? And some of them succeeded. I've actually worked with a few of those guys. It's debatable. I think there's certain characteristics that lend themselves well to trading, like an open-mindedness, being flexible, being adaptive, are really, I think, some of the key traits.
Andrew, I'm curious what you think about this. Retail trader, let's speak from a retail trader's point of view. A lot of people come to trading and come to the market for arguably the wrong reasons, and those reasons being they're attracted to the money, they get rich quick. This is a path to riches, and it's going to be an easy lifestyle, right? Mm-hmm. We could all kind of agree that that's probably the bad mindset. At the same time, you kind of need a little bit of that, right? You need to hey, I'm here for the money. There's no other reason I'm here. I'm not really providing a value to society so much. So I don't know. How do we strike that balance between, going after the money, but also try not to think too much about the money?
Therein lies the issue, Sean. You put your finger right on it. That is it, right? And so what I do in my work is trying to help my clients decouple as much as possible those outcomes, the numbers, how much money I'm making or losing, and the process and what I'm actually doing. Because if you have an edge, you have to learn how to trust your edge. So a lot of traders out there have a hard time trusting their edge. To answer that question, it's really about learning who you are as a trader. Trading is really it's a journey of self-discovery. I like to use a concept called the inner market. We're not just responding to what we see on the screen. We're actually also responding to what's going on inside of us, our own fears, hopes, fantasies, memories. All that stuff is inside of us. And that's actually kind of becomes an overlay onto what we see on the screen. In other words, we don't see the market as it is, we see it as we are. And if people believe that, then I think there's an edge in understanding who you are and how you became to be that way and how you see things. There's an edge in that.
Do you have
Do
follow-up?
you have situations when you work with clients where a client comes to you, they have an issue, they're not making money, they're frustrated, whatever, but you're sensing that all they're doing is blaming the market. Like they're saying, oh, the Federal Reserve is doing this, or the manipulation by X and, by so and so, or, the false earnings report by this company. Do you have that situation where they're blaming something external? And when that is the case, how do you kind of bring them back and be like, no, this is you. You got to figure this out.
Yeah, it's a really great question. And I do see that. It's interesting. I see that more with kind of the more retail traders. And what I point out to them is that if you're an angry trader, you're not going to do well. And I give them a lot of examples. In fact, I really think there's a negative correlation between anger and trading results. The more angry someone is, the worse their results are, essentially.
I love that. So if you're like smashing your keyboard or your screen, maybe take your ball and go home now.
You got to learn how to. I mean, it's one thing to have opinions and views and be skeptical of things. That's not that unreasonable. But to just be flat out angry and to start accusing things and it's manipulated, it's rigged. It's like, that puts you into a whole different kind of a mindset. That's really hard to identify edge and stick with it.
Oh, hold on. So I think this brings us to two interesting points that I want to explore with you.
Mm-hmm.
I've always been of the opinion that the same trader traits that make them really good at their job. Let's just talk about risk takers broadly here, but I've worked in the hedge fund world for some time.
Yeah.
The same traits that seem to make them really good at their job and excel at their job also are the source of personal defects in other walks of life. In other words, these people are type A. They're highly competitive. They need to be stimulated. They drive fast cars. One of the hedge funds that I used to work for, there was a party bus from Stanford to New York City. As soon as the bell hit every day, everybody went out. These guys partied. Then a different sect eventually formed of guys who would go to AA and NA meetings after work, but like partying was a problem.
Work hard and play harder. Yeah.
Yes. So is this just a culture that was created on Wall Street, or is there really something there that the people who show up to Wall Street and excel on Wall Street tend to be a certain way? And and that becomes part of their biggest work in life is controlling the other.
Yeah. Oh, it's really astute, Steve. Yeah. So it's interesting, the issues that people come to me for help, the bigger, more experienced veteran traders who've been really successful, they're coming to me for different issues. Sometimes it's not even trading issues. It's some life stuff, relationship stuff, substance abuse, other things, right? So your question about does trading kind of create this mindset, or is this type of a mindset attracted to trading? It's kind of both, definitely both. And I think people who have a competitive drive, and who like to kind of live on the edge a little bit are going to be attracted to trading. And then once you get involved in that, it's going to just amplify it even more. It's an amplifier.
It fuels that lifestyle if you do well, you make money.
But you don't have to do that. You don't have to be that kind of person to do well either. I want to just, that's just one way of interacting with the market, but it's not the only way. So
do you think the media has done a poor job at making it seem this way for people too? Like, just think of all the stuff that we have. We have the Wolf of Wall Street. We have Attorney Duff's The Buy Side. We have shows like Billions.
Yeah.
Perception out there that might also worsen this problem and fuel it.
Yeah, I think so. Yeah, I think it's pretty unrealistic. I mean, you've been around, so yeah.
Wait, you mean to imply that Hollywood is glamorizing what we do and making it seem like it's not what it really is?
Well, not so much glamorizing, they're distorting it in many ways. Yeah.
Right.
Yeah.
Andrew, I'm interested on your thoughts on this. I have mentioned this and I've actually given talks about this in the past. Yeah. I find it very interesting that in trading that there is theoretically an unlimited amount of ways that we can make money, right? There's all kinds of strategies under the sun on any kind of time frame, right? There's a million ways to make money. However, there's only about 4 or 5 ways that everybody commonly loses money. Yet, 90% of the people that come into this business are net losers. even though there's an infinite amount of ways to make money and only like 5 ways to lose money, right? The 5 common ways that people lose money is over trading, high expenses, undercapitalized, trading a strategy with no edge. That's 4. I forget what the 5th one is, but there's really only like 5 reasons why everybody loses money, right? So I find that fascinating. I don't really have an answer to why that is, but if there's so many ways to make money, why is it so hard?
Trading is the hardest easy money we can ever make.
Ooh, that's good.
It's easy because all you have to do is hit a button and things go in your way. There's more money in my account. It's hard because it requires so much self-control. So it's always going to be the hardest easy money anyone can ever make.
I love that. I just wrote it down.
Yeah.
Okay, so this reminded me of another thing I want to ask you. Oftentimes, especially in conversations like this, whether it's with you or with anybody else, we tend to focus on, why is trading hard and why do people fail and blah, blah, blah. Let's talk about the other problem. The people that you talk to that are doing really, really well. Now, just because someone is doing really, really well doesn't mean they've got everything in their life figured out. That introduces a whole nother set of problems. Mm-hmm. What are some common things that successful traders run into that really holds them back?
Yeah, well, arrogance, complacency. There's a lot of things that can show up for sure. One thing I want to also say too, a little, not exactly what you were just talking about, but a lot of people don't realize that what makes them good at some other endeavor, maybe they were a lawyer, computer programmer, or something, then they come into trading, the skills or the personality traits that helped you to succeed in one area of life or one endeavor very often are not going to help you. In fact, that can actually be a hindrance in trading. And I've seen that a lot.
We've talked about this theme on this show before. I think sometimes they actually work against you because you learn the lessons from being successful in one industry, and maybe all of that stuff is not the same, not applicable, or like you said, the opposite. Why does this happen so much? You're talking about doctors and lawyers. I got a buddy who's in the real estate business. He thinks he's a fantastic trader. He's done phenomenal in real estate. Now he's giving it all back in the market. Why does this happen like so often? Is it?
It's a combination of factors. There's 2 primary factors, in my opinion. One is a set of skills that don't really translate over. Like somebody who's a coder, programmer, it's all binary. It's very precision, perfection. You cannot be wrong. So they're going to be super precise. Yeah. Oftentimes, those folks, they look for exact precision movements of the market. And we know markets are messy. Markets don't move in precise ways, right? So that's one example. I've also seen people who maybe have had like an athletic background and they know how to be aggressive on the field. They know how to intimidate, right? You can't do that in a market. You're not going to intimidate the market. You might think you can in a moment, but you can't.
Imagine a young trader thinking he could just like come and throw his weight around.
Yeah, right. Yeah. So those are there's many examples, but yeah.
Yeah, it's true. I mean, there's so many businesses out there in any kind of business where sometimes people are successful just because they're like a force of personality, right? They're not necessarily bullies, but they could get people to do what they need done, and they're very good at that, and that's how they succeed in business. But in the markets, just because you want Microsoft to go up doesn't mean it's going to go up because you want it to. You can't talk to it to make it happen. You gotta kind of just give in and accept what the market offers you.
Right. Brings up an interesting point. You made me think of some clients that I've had who used to be salespeople in whatever world, software sales and whatever they were selling. Sometimes they can make the transition into trading somewhat smoothly in that I can show them their success in sales was due to their high EQ. And if they can apply those types of EQ and emotional intelligence skills to the market, how's the market feeling? What are other people feeling? What might make them buy or sell? And use those types of, because that's what a salesperson's doing. You use those skills into the market, right? Rather than just the force of their personality.
Ooh, this is an interesting thread, Straz, talking about the emotional component of the market. Andrew, do you have any?
Well, that's what the big traders they're having meetings about that like this week. It's like, essentially, it's like, oh yeah, who's going to do what and why might they do it?
So they're talking about who is what, like who's over leveraging the market, who's off.
Yeah, who's behind, who's puke it out, it crowded, who's behind, where's the cash, who's going to move, what's going to make the move. Yeah, all that stuff. Positioning, markets. My personal opinion, the 3 biggest factors that move markets, and this is not in any order, I think it's all three kind of at some point, maybe one takes the lead over the others, but all three are there, positioning, sentiment, and narrative, you know. And if you can sort of keep a pulse on those three things, you sort of can have a sense, right? You can kind of feel the market.
Well, Steve, that speaks to what Jason Shapiro said when we had him on the show a few months back. He talks about it's all about knowing where all the people are positioned, where everyone's on the same side of the boat. And at that point, there's no upside because everyone's already in. And if it unravels, it's going to unravel really badly in the other direction.
Yeah. Sentiment's probably a really underappreciated thing in our world. I want to know, how about somebody who doesn't pay any attention to this? Like Sean and I were always having conversations about our emotions, but a young trader or a new trader might come in, listen to this conversation, and be like, why are they talking about their feelings? I'm just out here trying to make money today. Right. Like, are there people who can just go through and find success in our world without ever giving any thought to what we're talking about here today?
There are some, not many. There are some. It's an exception. Yeah.
You know who I think would be a really good trader, Straza, is Mark Zuckerberg. He seems like a robot. No emotions.
Emotionless people, right? Maybe they don't even need to think about this stuff. They don't feel emotions. I don't know. I only know how.
Well, actually, to be honest, guys, there's some really good neuroscience research saying it shows when the emotional area of the brain is offline due to a lesion or a tumor, it's not working properly. It's really hard to make any kind of decision. You actually need emotional input to make a decision, and they've shown this many times over. So to be complete, first of all humans are emotional, even if they don't show it. They might seem like they're cool as a cucumber. They might seem like they're unemotional, but it's like a duck on the lake, right? It might look smooth on the surface, but it's under the surface. There's stuff going on. There's emotion. It's not like an iceberg. What you can see is above the surface, below the surface, there's a lot going on usually.
No, this is a fascinating take. You're saying there is an emotional component to every decision. How many times have we heard it in pop psychology, pop trader psychology, that we have to eliminate emotions entirely from our trades? You got to be a systematic trader, no emotion whatsoever. You're saying the opposite.
You know, I understand why people say that. It's logical. It makes sense, but it's not the way it is. And what's also interesting, guys, is that I've worked with a number of black box systematic traders. One would think that they've cured the problem of psychology or emotion in trading. But what happens with those guys is they will tinker with their system at the wrong time. And then they get really pissed off with themselves. And then they reach out to me. Why did I tinker with my system at the wrong time? Or why didn't I adjust it when I should have adjusted it? So even if you're completely automated, there's still emotions.
Right, so the black box guys, what they're dealing with is they're reacting to the income stream or the return stream of their product, and they're not handling that well. So maybe they're not pressing the buttons to trade in and out every day, but they're watching their P&L curve and they're getting triggered by that.
Very much so. And not only that, but even just developing their systems. I've worked with algo systems developers at funds. And so when they're coming up with the parameters and making assumptions and parameters are based on perception. Perception is influenced by how you're feeling. So I pointed out to some of these folks, and I've used some pretty good actual empirical research, that they think they're being very analytical and mathematical, but there's actually some subjectivity involved. So, and how they're choosing what parameters they're to use.
I like to hear that. I mean, we're pretty discretionary over here, Sean. So
I'm 100% discretionary myself, personally.
Well, think about what we just talked about with the Jason Shapiro comments and what you just said, Andrew. Sentiment, the emotions of the market are so important. You're going to program that? Good luck.
Yeah, I've tried, but it's really hard. I worked with a guy from Balyasny many years ago. We tried to program emotional sentiment on Twitter. We got the first API and permission from them like 10 years ago to work with their data, and we couldn't find the signal and the noise.
That's incredible. I mean, we've worked with like stock twits and like folio data and never Twitter, but we kind of found the same thing. And the other problem is too, you got to update that model constantly. It's constantly changing. The social media landscape, it moves quickly. So
all right. So Andrew, sidebar here real quick, because when you mentioned the Twitter thing, in your position, doing what you do, working with the people that you work with, in having discussions with them, has anybody ever dropped a morsel of a trading idea and you're like, oh, that sounds great, I could do that? And make some money on your own?
It happens at times. It happens at times. More often, I'll be hearing from clients who are on different sides of the same trade or have different views. That happens more frequently. But yeah,
That's a pretty privileged position you're in there,
it can be.
Some masters
Yeah.
of the universe and get
Yeah.
some good trading
Yeah.
ideas.
Yeah.
Andrew, how active are you on Twitter? Like, are you following what all these crazy traders are saying and doing on the internet, or no?
That's my Achilles heel. I need to be more active on Twitter. So it's a good question. Maybe you guys will help me to be more active. I need to get out there more. I like to hide out. I like to do my own thing. I've got some great clients over the years. They refer other clients to me. I've never felt like I had to put myself out there, but people like my information and my content. And it actually does feel good to help people. So I should get myself out there.
Well, what you're describing sounds like a nice life. I would say there's no rush. Social media.
Yeah, I mean, I get a little hesitant. I know that social media world is like, do I want to play in that world? We'll see.
Can you take, like, do you get any hints by the way that people carry themselves publicly or on social media?
Mm-hmm.
Like, you look at a certain trader on Twitter and be like, oh,
yeah,
he needs to call me.
Yeah.
Or,
I don't follow a lot of people. And it's funny, I purposely follow people who are often very different from me because I like to get a range of what's going on out in the world. Not people I necessarily agree with. I don't want to be in an echo chamber. So I do see that a lot and I get tempted, but it's not my place to reach out. I never reach out to people at all. I've never once. But I think about it.
So what might those behaviors look like? Like somebody that you would think, oh, that's probably trouble. What are they doing?
There was this one guy, I was following him for a little while just because he had really entertaining posts. He was pretty witty, making tons of money. Every trade was a winner. And it was like, and it was obvious he was arrogant, but it was like, hey, wait a minute. If this guy continues on this path, obviously he's either already blown up or he's in the process of blowing up right now. And maybe I should just continue to watch. But it got to the point of like, this is just ridiculous. So I just stopped following him. So yeah, it happens a lot. Yeah.
You never have to lose on social media, right, Sean?
Of course not. Of course not. I'm a little bit more reserved on social media than I was, like, say 5-10 years ago. And I've always been curious. Like, I've always wanted to go back and read all my old tweets and see if there's any patterns I could detect. Like right before I'd have a big drawdown. Like, was I saying anything that was just like, oh yeah, here it comes any day now? I'm sure there's a pattern if I went back and looked.
Oh, there is. And I can share something with you guys. I'll make a little, one of my biggest drawdowns. It wasn't a social media thing, but I got interviewed for a book many years ago. There was a book called Traders at Work where they interviewed Peter Brandt, Linda Raschke, Todd Gordon. I was one of them. 16 traders, a chapter on each trader. I felt kind of honored to be part of that. Guess what happened right after that book came out, guys?
Lost the
biggest drawdown of my career.
Pretty good.
Oh, a book goes out to the public touting you as a trading expert.
So I felt like I got burned for going out in public. It's like, I burned myself. The book didn't burn me. My ego, I was too big for myself and like arrogant and, I got it made in the shade kind of thing. I was like, no, got a little sloppy on the risk. So
and were you able, like in hindsight, you were able to measure it back to like, I was probably putting on too much.
Oh, no, totally. Oh, no, I can look at it because I've talked about it a lot with my wife. Was like, oh yeah, this is really clear what just happened.
You were like, I'm in a book. I could double down. Let's go.
Yeah. So I've been in some other books since then, but I've been really careful to I kind of ignore it.
Strasser, there's a certain small segment of our audience that's going to really appreciate this mea culpa I'm about to throw out there.
Ooh.
That I've people kind of get a kick out of the fact that when we're in a bull market, I will frequently go out there and tweet, it's a bull market,
It's your thing.
People love getting that from me. I've been doing it for years. I mean, I started doing that maybe 20 years ago when I first got on social media.
Yeah.
But the thing I'm going to admit right now is that for many years early on when I was doing that, like we're talking 10 years ago, I was trading like delta neutral option strategies. And I would always get burned on the upside. It was always the upside when I was trading delta neutral option strategies. That was always the hardest thing for me to manage risk wise. Mm-hmm. And so when I would get really frustrated because the markets are ripping away from me, like that's when I would tweet that it's a bull market, because really I was saying that to myself. I needed to tell myself that, Sean, you're an idiot. You're on the wrong side of the market. Get out.
That's really good. And you've never told me that before.
Yeah. I used to do that for years and it was really just me yelling at myself. It's not the case anymore. Now I just do it because I do it because people like it. And it's a bull market. And I like to remind people it's a bull market. But But years ago, it was really just me yelling at myself. I wasn't listening, of course. I wasn't listening to myself, but that was me.
Makes me wonder how many other folks are doing the same thing, Sean, out there.
No, that's, I mean, you were joking, but that's totally true.
Yeah.
We follow a lot of people out there. I mean, Straza, and you know, you and I are pretty active on Twitter. We know that when markets get, you know, kind of dicey and things are selling off and volatility is spiking, there are certain voices that we didn't hear much from for a little while, and now all of a sudden they're all over the place, right? And that's when you know that, okay, the emotions in the market are getting high. We're probably getting close to a turn here because, you know, the bear shitters are out there getting real loud, and there's signal there.
First of all, there's some great data out there in what the users are saying, but there's also some people who have built a large following and are masterful in the way they use it. They'll put out tweets. It might not actually be what they feel, but they're fishing. They're fishing for sentiment data. They'll say something and see if they strike a chord. They'll say they like this group and see how many people agree, right? And that's like next level Twittering, I think.
Oh, I think we know somebody like that who has the initials J and C.
Oh.
Yeah. But
anyway,
he likes to go out there and fish for sentiment, but it works. It's great.
Before we run out of time, I have some like high level fun questions I think we need to ask before we wind this thing down. Okay, 2 for you, Andrew. What is the most common issue that you see traders experience? And then also, what's the most severe? Like what is something that you talk to a guy and you say, oh no, he's in trouble? That's a tough one. Most common.
Yeah. All right. First question. The most common one is by far is just my impulsivity. I'm over trading. I can't control myself. I get in too quickly, too soon. I front run. I'm too big. It's just too aggressive impulsivity, however you want to describe it. And then your second question, I mean, that's not the only thing I get, but that's probably 70%, 60%, 70% of what we call the presenting problem in my field. Your other question would be, what's the worst? I mean, all right. I had a guy a couple of years ago, a retail trader who from SoCal, who came into a bunch of money through an inheritance. Family was in real estate, burned all the money trading, but had access to more money and was not wouldn't understand that risk management is really the secret to succeeding in trading. And I was trying to show him that, but he lived in Beverly Hills. He just wanted to catch up to his neighbors, make even more money. And it was just, and I was just because you have a lot of money does not mean you're going to be a trader. You should be a trader. So that was he
didn't want to think about losing money.
No, exactly. So that was a really difficult situation, you know? Yeah.
The old keeping up with the Joneses, and that's tough when you live in Beverly Hills.
Yeah. And then he kept pointing out to people on Twitter who were making tons of money. I just want to be like one of those guys. And I'm trying to tell him, first of all, we don't know if those people are making tons of money, right? Like what you were just saying earlier.
What kind of standard advice do you give people? Because this is obviously a common problem that you deal with the whole keeping up with the Joneses situation or lifestyle drift. Like what do you tell people?
You know, so a big part of trading, to succeed in trading, is you have to feel satisfied and fulfilled in your personal life. If you come to trading and you are completely unfulfilled, whether it's financially or emotionally, like you're feeling lonely, in poker, they have an acronym, HALT, HALT, hungry, angry, lonely, or tired. If any one of those things are present, you need to walk away from the table, step away from the screen. You need to be personally fulfilled and satisfied to be able to interact and dance with the market. You can still interact, but you'll be in a much better place to dance with the market if you come in feeling personally fulfilled already.
This is a very important topic, Andrew, and I could speak personally. Like, there are many times where, you know, maybe I'm pissed off about my job, or I'm pissed off about the way a friend treated me, or I'm pissed off about, you know, you name it, anything. And my natural inclination is I'm going to take it out of the market.
You don't think that way, but that's what's happening. Yeah.
That's what happens. And I'm ashamed to admit that happens more often than not, Andrew. There are times where I'm pissed off about something or whatever. And I'm like, oh, I'm going to go make it in the market today. And that's going to make me feel better.
Well, Sean, the good news is the fact that you can admit that right there separates you from the vast majority, because everyone does it, but it's only a few people can admit it.
Yeah, I love this.
So
it does happen. Me too, Sean.
When JC trolls me about the Buffalo Bills, I'm like, I'm going to show him. I'm going to go make a big crazy trade and make a whole lot of money.
Yeah.
So here's something like for me personally. Am I crazy? I think like I kind of get my rocks off on Hard Rock bets. I do my little gambling. I lose money on football every Sunday, like clockwork, every
There you
Sunday,
go. Okay.
Saturdays too.
Okay.
Saturdays too. And like that's my fun. That's my fun.
You're,
Like,
so you're
that's it.
working out the crazy risk seeking in that area.
Am I onto something or is this just
Yeah.
a stupid
You know
excuse I
what?
like to gamble?
Yeah, Steve, if something works for you and it might sound unusual, I always say keep doing what works. It doesn't matter what someone else thinks. It doesn't even matter what I think about it. If it works for you, keep doing it, my friend.
I find I buy far fewer weekly calls when I'm getting my gambling on the weekend.
Yeah. Because you're feeling satisfied. You're coming in without that. You don't have as big of an itch to scratch. Yeah.
So when the Giants cover the spread, then you're not buying Friday expiration options that week.
I put on no YOLOs today. The Giants were good. The Hurricanes won by like 40 points. It's fantastic. Yeah. I don't know.
Hey, look, if you're doing that with a small amount of money that you don't care about, I mean, obviously you care about money. You don't want to just throw money away. But if it's money that you could afford to play with, that's probably a great outlet for you, right?
I'm having fun doing it. Look, sports gambling is new, so that's why I had to ask. This is a new thing for me.
Bet it all on the Bills, baby. That's my team, Andrew.
Hey, that's another topic we should talk about one day is the similarities and difference between sports and trading psychology.
Well, I mean, let's touch on it a little bit here because this is actually a topic that's fresh in my mind. In fact, Straza, you and I were just talking about this today. We were in Chicago recently. We went to a Cubs game at Wrigley Field, and you commented on the fact that there's a huge DraftKings pavilion that has recently been added to the outside of Wrigley Field. So you can go to Wrigley Field and actually bet on sports right there at the ballgame, which is a totally new thing.
Yeah.
And I don't know. I have mixed feelings about this. I feel like it sends the wrong message, especially to young kids. Like I have a 10-year-old son who's really into sports, and whenever we're watching games, we just get bombarded at every commercial break with sports betting stuff, which I think is incredibly irresponsible. But are we creating the next generation of degenerate stock market gamblers by, enabling this easy sports betting that's available to everybody?
I don't know if we're creating it as much as the fact the market is just open and constantly in motion, and it attracts humans to want to make money. So I think it'll always be there anyways. Yeah. The desire to gamble will always be there. I don't think it's necessarily any particular, fault of any particular situation. I think it's just present and will always be there. It's human nature.
Maybe what do you think? Some good lessons. I don't know. I could see it the other way too.
Yeah.
All right. Give me the bull case on how sports betting is good. I'm curious. I want to know.
Yeah.
You walk in, you start gambling, young guy, you lose a bunch of money, you feel like an idiot, and you learn about risk management. I don't know.
For some people, it may work that way. Hopefully.
Yeah. The ones that have a good outcome for sure. That works out. I mean, look, you kind of mentioned it without saying it, Andrew, but the gambling instinct has always been a part of human nature, right? There's been card games and casino games going on, for hundreds of years. The stock market these days just tends to act as one of the biggest gambling casinos for certain types.
Mm-hmm.
So there's always going to be an entity or a person or a business who is going to offer to the people something that they want. So whether it's sports gambling today, whether it's betting on politics down the line, whether it's I don't know what's next, but there's always going to be a market for that. And maybe I should stop being so Puritan about it and just accept it.
Very philosophical.
Right, Andrew, Andrew, we promised you we wouldn't take more than an hour of your time, and we're kind of getting up upon that now. We really appreciate you doing this with us, and I consider myself very lucky to have gotten to know you recently. I knew of you for many years. We have some common friends and some common circles, but you and I never crossed paths until recently, and I'm incredibly grateful to get to know you, and you and I have formed a friendship since we first met.
Yes.
So this is great, and what you do and the services you provide, are much needed in our world. And I hope we can encourage you to get a little bit more active on Twitter and with your blog, because the wealth of information you have to share can help a lot of people. And if we could do anything in our power to help you get that message out, the more the better.
Yeah, I'll play if you guys want to at me.
No, this was really a blast. Do you want to leave some of the young traders who listen to the show with some advice? What would you tell them if I was just getting involved with markets to keep their head on straight?
Yeah. I mean, do I have a minute or 2 minutes, or how much time do I have?
As much time as you need.
As long as you
All
want.
right. So here's a really great piece of practical advice for anyone who's developing, even if you're already think you got it down. Track your trades at the end of the day or at the end of the week into one of 4 types and keep track of them. Type 1, you followed your plan and you made money. A type 2 trade, you followed your plan, but you got stopped out at your predefined stop level. Type 3 trade, weak process, you didn't follow your plan and you lost money. Type 4 trade, you didn't follow your plan, weak process, but you made money. You have to track your trades because you have to know how you're making your money and how you're losing your money. Because if you're making money with type 4 trades, guaranteed you'll never succeed. And you have to know that. It's a self-honesty exercise. It also helps you to decouple outcomes from process. Realize you can't control the outcomes. All you have to do is focus on the process. Very practical advice.
Is it enough to just track them and write them down and keep a diary, or should you really go back and review it then?
Go back and review it. Oh yeah, look at it and look for patterns. You will see patterns. You'll see the type 4s and 3s will come up, perhaps for some people after a whole bunch of type 1s because you're feeling overconfident, or maybe after a bunch of type 2s, but there will be patterns that repeat. And then you can start to predict, oh my gosh, there's a pattern beginning to show up. I know what's going to happen, right? So
Andrew, you reminded me of something, and I want to ask you for a favor. Maybe you can help me. I need to give advice to somebody else. I have a person, an individual that I serve as a mentor to, and this individual just came to me just recently, just this week, and said to me, this person has been trading mini futures products, like the small ones, because because this person is trying to get their strategy down. This person has not been consistent, has not really made any money, hasn't lost a lot, which is great, but really hasn't made any money. And this person came to me this week and said, I think I need to trade the bigger futures contracts. I feel like I'm just spinning my wheels here with these little ones and I need to get bigger. And I mean, I'm like, in my head, I'm saying, well, no, you're not ready yet. Until you're killing it on the small contracts, you're not ready to trade the big ones. Do you have any gentler ways to tell that to somebody? Help me out here.
I would come at them with questions like, why? And keep going after the why. Why do you want to get bigger? How do you see that working for you? What will it be like when a trade moves against you and you're X bigger? What's going to happen? How do you think you're going to react when that happens? So I would just use, rather than trying to tell them what to do, because traders don't like to be told what to do. But if you use, and I also do executive coaching with people who aren't traders, like some CEOs and some founders. So when you work with someone like that, you want to use questions. If you're trying to get through resistance with somebody, rather than tell them what to do, you got to ask the right question. So I would find the right question to keep coming at. Why?
So just hit this person with questions and get to the why.
And eventually you might hit the right question, in a moment where they stop and think about it could be the moment of clarity for them.
So it definitely should not be saying, no, you should definitely not be doing that. You're not ready.
Because they're going to probably be like, oh, I'm going to double down. Sean doesn't, Sean's not me. I can do it. Right. They're going to push against that. Right. It might make them they're going to dig their heels in even more probably.
Okay. No, that's great advice. Thank you. I'm going to take that because I do owe this person an email. So I'm going to get on that today. Andrew, again, thank you so much. We're all lucky to have gotten to know you, and we're going to be continuing to get lucky to get to know you better in the coming months and years for sure. So, Andrew, just last thing for people who want to interact with you, is there a way you'd like people to reach out to you? Do you want to hit your website or Twitter, or what's the best way?
Website or Twitter. My website is andrewmenaker.com. Twitter is @Andrew_Menaker. Either way is fine. Yeah. And I'll start trying to tweet more. And I'll start maybe doing some more blogs. I don't think I blogged in a while.
We got to get him on we got to get him on our Twitter Spaces every once in a while. What do you think about that?
That would be a real treat. And we'll have to have you back. Have you been on the morning show?
I'm a California trader, man. Those early morning shows. Maybe one day, we'll see, perhaps. But
those hours are brutal.
I get up at 5:30. I'm just waking up. Market opens at 6:30 for me. It's like,
if we ever come out with an afternoon show, Andrew will be all over that.
Careful what you wish for.
I know. All right, Andrew. Thanks for doing this, buddy. Guys. We really appreciate you.
It was fun.
That was a great talk, and we could have talked for so many more, so much longer. And one of the things that I wanted to bring up, I just couldn't figure out a way to work it into the conversation, is that Andrew and I have talked offline over the last few months, several times. And one theme that he's brought up with me a few times is traders need to really meditate on decoupling uncertainty from risk. People kind of, treat them like they're the same thing, but they're really not. And there's really some nuggets in there for traders who are willing to think deeply about it. And I don't really have any answers on it, but I wanted to probe that with him on the podcast. Unfortunately, we didn't get into it. I just couldn't figure out a way to weave it in. And
he mentioned it really early on, like that, the importance of that difference between uncertainty and risk dawned on him when he was doing the hostage negotiations.
How crazy is that? He got roped into negotiating a hostage situation. Meanwhile, this was going on while he was supposed to be at an interview at Wells Fargo, and he called them and told them, "I can't make it because I'm negotiating with a hostage with guns. I can't do it." And he eventually got the job because they loved the story.
I've heard a lot of stories about non-traditional paths to finance careers, but this is the best. That was the best starting out story for sure.
Yeah, no, that is so great.
I think we could have done a whole episode on what makes a trader, the good and the bad. We kind of hit on that a little bit. It truly is a crazy bunch for the most part. I don't think what you see in the movies is necessarily true, but there's something there. And I think it's science because I've seen too much of it. I also think what he said way at the end was fantastic because I talk to the analyst team and the people we work with and even my peers like a trader. I don't ask them questions. I tell them, you're crazy. Why are you putting that trade on? What the hell are you doing? That's a downtrend. We don't buy charts that look like that. What is wrong with you? I've never once thought to pose these things as questions. It's just not.
Yeah. Why do you think we're going down? Why do you think that you need to size this position this way? Why do you need to trade it in this way? Those are better ways of doing it for sure. See, he's a professional and you and I aren't.
I'm like, what the hell's wrong with you?
Yeah, you and I are terrible mentors.
I think more conversations with people like Andrew are fantastic. Just I don't know about you, but me getting to have this kind of talk makes me think of things that I probably don't think about enough. And our audience getting to listen to these talks and the kind of stuff he's talking about and getting to know yourself and the importance of that. I know, yes, Sean, he said there's a rare breed of people who can never even think about these things and be just fine. But I have a hunch that that's not the case for, 95, 96, 97% of us. The sooner that you can get to know yourself and what those emotional downfalls are and learn how to process and feel those emotions, right? And not let them kind of win. Sooner you figure that out, the better, I think.
And speaking of emotions, I think that's going to be like a bomb that explodes in a few people's heads, including mine, when he was talking about how, emotions are actually a good thing when it comes to making decisions. I mean, how many times we constantly hear it in trader talks and in every trading book we've read that you got to separate your emotions from your trades, blah, blah, blah. That's easy to say and that's easy to agree with, but Andrew kind of has a new twist on that. And I like that. Instead of trying to fight our emotions, which is fucking hard, right? Yeah. Let's just embrace them. Take them for what they're worth. Use them as signal, if nothing else. Use them as signal, Straza. I was talking to somebody the other day about how I've noticed in myself a lot lately where I will be in a trade or in a position and I'll be watching it and I'll start getting chills. Like I get cold and I'm not in a cold room. There's no reason to be cold. But all of a sudden I get a little cold. I'm like looking for my sweatshirt. I'm like, well, like I'm getting all like a whatever. And that I've learned that's my body subconsciously telling me, Sean, you have too much risk on here, or there's a turn coming. You need to take action before it's too late. Yep. It's amazing how many times that has predicted the turn for me, Straz. If I would have just like closed my entire position right then, 8 out of 10 times, it would have been the better move. I just got to listen to my body.
But that takes a lot of wisdom and time, I think, right? Like it's one thing, like feel them, process them, understand that they're going to be there. But it's not as simple as just fading every emotion that comes in. You got to get to know them. And then through experience, you know the good emotions and the bad emotions. Some of them, yeah, you do want to fade, but sometimes they're right? So it's just about getting to know those emotions, knowing that they're going to pop up, and then acting accordingly, whether that's following them or, like you're saying, fading them. This is next level.
This is why this game can never be fully won. You were always learning. There is no end game. We're all on a journey with no end, and that's both challenging and amazing. So let's appreciate that.
I appreciate that we do this podcast and get to have these conversations. I think this is a great episode, so I hope you all enjoy it.